Welcome for joining us today for QSTP's first webinar as part of our Impact Engine series, where we convene founders, investors, and innovators through our webinars, workshops, and hopefully soon, our podcast. The title of today's webinar is Inside the Investor Mindset. My name is Kareem Hamwi. Some of you know me. I'm the program coordinator here at QSTP. And I'm excited to have Aboudi Al-Qattan join us, who is a former professional basketball player and current principal at Dash Ventures. So before we get started, I want to just quickly let everyone know what we do here at QSTP and why we're here today. So Qatar has positioned itself as one of the most dynamic gateways for founders, offering direct access to world-class research and education, a highly connected science and tech ecosystem, and a unique launchpad to scale across the Middle East, Africa, and Asia. QSTP is at the heart of this vision as part of Qatar Foundation. Sorry, just realized my screen is still sharing. But as part of Qatar Foundation, we exist to support deep tech startups that want to turn bold ideas into global impact. Our mission is to help build disruptive science and technology companies, helping them grow faster, scale smarter, and achieve outlier returns while still creating impact. The purpose of today's session is to give you all an inside look at how investors think, with practical insights from Aboudi Al-Qattan to help sharpen founders' approach to fundraising. We'll also be having 3 fantastic QSTP startups pitch for us live with feedback and to give you real-world examples of how pitching should look like, and get some advice from Aboudi on what he thinks about these pitches. And then we'll open the floor up to any questions that you might have for Aboudi or for the startups as well. So please leave your questions in the Q&A section down below. If you can't see it on your Zoom, you can click the more. It's the 3 buttons on the bottom. And there's a button that says Q&A. So if you have any questions, leave them out throughout the webinar, and we'll make sure to get to all of them as soon as we can. We'll probably leave it to the last 10 to 15 minutes of the webinar. I also want to let everyone know, as you heard, this webinar is being recorded and it will be posted on YouTube probably within the next couple of days. So if you ever do want to go back and look through it, you can. But enough about what we do at QSTP. I want Aboudi to share a little bit about himself. And so, Aboudi, it's all yours.
Sure. Thank you, Kareem, for the opportunity. Nice to meet everyone. Like Kareem said, my name is Aboudi Al-Qattan. I'm originally Palestinian, but I was born in the States and raised in London. I went to Babson College, which is a small entrepreneurship school outside of Boston, and then moved to Amman to work as an analyst at Dash in 2017. I spent a year there and then got an opportunity to pursue, like Kareem said, a childhood passion and play professional basketball. So I went to Kuwait. I did that for a couple of years and then moved back to Dash at the height or the beginning of COVID in March 2020, and rejoined Dash as an associate, and have now worked my way up to be a principal here. Dash is one of the oldest VCs in the region, but we don't adopt a typical venture capital fund structure. We are an evergreen structure, which means we're fully capitalized by our founding partners. This gives us an inherently patient and long-term approach, because we're not typically fundraising and going off and trying to raise fund 2 and fund 3 and acquire additional funds, but we actually just have one pool of capital that we continuously reinvest from. Even when we get exits, we obviously take our carry and we repay their partners, but then we reallocate funds to continue investing to build a sort of long-term sustainable approach to VC investing, rather than the typical venture capital approach, which is quick exits and taking money from partners. So the idea is to take a more founder-friendly approach and to leverage the experience of our partners, Ali Husseini, Saeed Darouze, Ammar Sati, all who have incredible track records building and working in multinational companies, and using those experiences to help early stage startups grow and scale across the region and around the world.
Great. Thank you, Aboudi. That's a really good description of, I guess, what Dash is and what you do at Dash. I did want to ask, as principal of Dash Ventures, what does it really mean to be a principal? What does your role really entail?
A good question. So again, we're a pretty close-knit team, and it's just the 3 co-founders and myself that I mentioned. So I think I touch upon a bit more than a typical principal would do. But the sort of development of my career was, as an analyst, I was helping out with the existing portfolio, doing a lot of sort of administrative tasks, learning how startups work and the kind of things they need as they grow and scale, helping to build presentations, reports, taking notes on calls, kind of the junior role. And then as you grow and scale within a VC organization, you start to lead your own deals, sit on boards, source your own deals. So what sort of changed for me along the way is I've used the network I have, through my family and my own connections to acquire deals that maybe wouldn't have come across the Dash, workflow without my presence. I lead those deals with the support of my partners, Omar, Ali, and Saeed. And then again, like I said, start to do value creation for the portfolio of deals that I've led. So, like I've referenced a couple of times, we are not the typical VC. We're not investing in 10, 20 deals a year. We're very methodical. We take our time. I think since I've rejoined Dash in 2020, we've done only 7 or 8 new deals. We always reinvest in our portfolio. We don't just invest once and stop. We invest all the way up until exit, which again is a function of the evergreen structure I referenced. But my job now primarily is to continue to source deals. But because I also have now 5 or 6 that I've led on my own behalf, is to really understand where we can add value as Dash and focus on the portfolio, whether it's helping them fundraise, helping them hire, strategy, anything really. You wear a lot of hats as a VC and just get your hands dirty.
Yeah, I love that. With Dash, I guess being a very exclusive fund almost, right? Being limited to how many startups you invest in. Can you give us an example of a startup that you've invested in? Maybe a startup that you like or enjoy?
Sure. I'll go ahead and just use the latest one. It's a company called Orbi, which is a Saudi UAE company. What they do essentially is they do credit analysis for any B2B company that wants to get into lending or that already does lending. So we have a lot of extensive experience in fintech. And while in the past we've done direct lending companies, so companies that actually go acquire debt and then issue debt to either startups or mom and pop shops, Orbi takes a more innovative approach and is tech only. So what they do is, let's say for a company that like a Talabat, for example, that has a bunch of restaurants on its platform. If Talabat wants to start lending, but doesn't have the core competency to do that, what they'll do is they'll procure Orbi. Orbi will leverage data, AI, machine learning to recommend, loan amounts, tenors, anything to do with the actual loan itself to Talabat and say, restaurant A should get this amount for this much time, restaurant B can get this amount for this much time, and essentially tell them how to loan and do the credit analysis for them without actually having to acquire debt themselves. So what this company does is take a less capital intensive approach and more of a technology first approach.
Okay, very cool. I love that idea. I did want to ask, I guess a lot of our startups are looking for investment opportunities, and I wanted to kind of ask you if there's any chance of where do you invest? I know you invest within the MENA region, so are there opportunities for investments in Qatar? Are there any opportunities for our startups to reach out to you, apply online? How does that look?
Look, I think typically, just to be fully transparent, because we've been around for so long, the way we prioritize deals is if it comes through a close, trusted person in our network who knows the kind of stuff we like and who says, "Hey, I've vetted this deal," or "Hey, I'm going to invest in this company. Would you like to take a look at it as well?" That being said, it's not really fair for founders who don't have the network to make direct connections with startups. So we do have an info@dashventures.com. Which we respond to every single email, whether it's same day or a week later. We do respond to every single one because it's not fair to only look at deals that are coming from within your network. What we look for, whether it's regional or the one thing that's really important for us is their founder market fit. So has the founder lived the problem he or she is trying to solve? If you're able to convey that you understand the problem and the solution you're building is different than what's available on the market, then we'll take a look at it, whether it's in Bangladesh or Qatar or Palestine or anywhere else in the world. We do have a MENA focus because our founders are all Jordanian Palestinians, and so we like to focus on the MENA region. But like I said, one of our most recent deals is a company based out of Pakistan. We've got companies based out of Canada as well. So we are pretty flexible in how we invest.
Okay, nice. And I want to kind of get off Dash Ventures a little bit and talk a little bit more about you. So I actually I guess was introduced to Aboudi months ago. I want to say before I joined KSTP about 6 months ago through my brother. And something that I found super interesting was when I was introduced to you, I heard you were a basketball player and that you worked in VC, or an ex-basketball player that now works in venture capital. So I kind of wanted to ask what fueled your passion to become an investor from being a professional basketball player. How did that kind of connection happen? I know you mentioned it was through what really fueled your passion. What made you really want to continue with VC and kind of move in that direction?
I think I found a lot of similarities in venture and basketball, in that the work you put in does not show right away, and it takes time to see the fruits of your labor. Obviously, you don't just wake up and you're not just good at sports. Not even if you have talent, right? You have to work for what you get in on the sporting field, whether it's basketball, football, or track and field, whatever it is. And in VC, it's the same thing. You invest at the seed stage, but you might not see an exit until 5, 6, 7, 8 years later. So number one was I felt there was a lot of relevance between that sort of slow grind and that betting on yourself, right? Believing that what you're doing over a long period of time will pay off. But also just in terms of my passion for VC, a lot of it stems from my desire to give back to the region. I think we're at an inflection point in our region, especially with what's happening in Gaza, we all have a collective responsibility to showcase the talent and the kind of people that come from our region are capable of competing on the global stage, whether it's startups, athletes, whatever it may be. So for me, it's always been about getting back to MENA, to sharing stories and voices from our region, to backing founders building in these emerging markets. Right, it's not easy to build in MENA. Things are still very bureaucratic. It's not easy to build a company that operates in both Qatar and Lebanon, or Saudi and Egypt. It's still quite difficult. So the opportunity to be a part of it and to help bridge this gap and to make our ecosystem something that international investors take seriously was an opportunity I couldn't really turn down.
Yeah, that's I really like that, and it's also, I guess, I like the explanation a lot. How you relate it to basketball, and you kind of see vision in both of them, and compare them in both, in the sense that, yeah, it takes time to really see something come out of either of them, right? And I guess on the point of basketball, for people that don't know, Aboudi actually hosts a podcast called the Beyond the Buzzer podcast, where he bridges the gap between entrepreneurship and sports. And so I want to know how that came into play. But I did want to mention that, talking about your two passions of VC or venture capital and your basketball career, I guess, I love how you kind of found that connection between them and created a kind of podcast out of it. I just want to know, how did that happen? How are you able to get that kickstarted?
So the podcasting is very relevant to the same analogy I made with VC and basketball, which is like, no matter how good you might think you are at speaking or leading a conversation, like there's so much content out there that to build a successful podcast and to get people to subscribe takes a lot of time and a lot of consistency, and it also kills your ego to like put yourself on YouTube and realize that no one's watching you at first. Right, we've been doing it for a year now, so we're inching up in terms of subscribers. Whoever's here, go subscribe to the podcast. I also learned that along the way. You have to be kind of shameless and remind people to subscribe. But actually, my co-host is the one that started. He's arguably the best Jordanian, and if not one of the best Arab basketball players to ever play. And he saw my sort of transition from the court back into VC very seamlessly, and was like, him and I both found our careers after sport, but a lot of athletes spend their entire life playing a sport, dedicating their life to the sport, retiring at 33, 34, 35, and then have no idea what to do with their life. And so the point of the podcast is to articulate that what you learn in that environment and a sporting team, or, if you're doing an individual sport, will actually help you excel in life. And that this rhetoric that, being an athlete means you're only good at being an athlete is BS, for lack of a better word. And so we just got together with the idea of hosting elite athletes, helping them understand that what they're doing is relevant for the rest of the world, and then also targeting athletes that already are doing things outside the sport to help show that it is possible. And that's kind of what drove my decision to go pro again recently, is that I go on and I speak about all this on my podcast, but I don't do it. So when the opportunity came 2 months ago to move back to Jordan and play for a team here, even though it's and you can probably sense that I'm tired from my voice, even though it's a bit tiring and draining, like I figured I really needed to practice what I preach. So that's why I'm doing it now.
Yeah, I love that. I've honestly watched a couple of episodes. I've seen your clips on, Instagram and LinkedIn, right? And so for everyone listening, I guess, everyone watching, definitely go take a look at it. It's called the Beyond the Buzzer podcast. It's a super interesting, and if you are into sports, especially, it's a super interesting podcast. It's a great watch and a great listen. But I guess on the point of venture capital and sports, right? taking time to really see an impact with your investments. Let's take it back to the venture capital kind of side of things. I always tell founders that it's super important to build relationships with investors early on, right? So it's not always, don't always look desperate and kind of attack investors when you need the capital. But it's super important to really build that relationship. And I mentioned this now because of that, taking time to see an impact. So I guess, how can startups build trust and maturity when it comes to building that relationship with investors early on, rather than just needing capital right now and then looking for investors, right?
It's a good question. Like access is no longer asymmetric, so anyone can email anyone and get in your inbox. So for me, it's like, have you done the work to look at my portfolio, to look at, you know, Dash's portfolio, look at our ethos and understand what kind of stuff we look for? And if so, when you're reaching out, have you made the effort to consciously tell us, you know, why you think we're good investors, right? At the end of the day, like, we get so many emails a day being like, hey, this is my startup, you know, looking for investment. But if you are sending me something that we clearly don't invest in, or we already have a similar company, like, that I know you haven't done the bare minimum, which is your own research. So number one is like, try and find out who you're speaking to as a human or as a VC. Like, try and understand, what does Aboudi invest in, or what does Aboudi like, or what is Dash like? More importantly, right? I'm part of an institution, so I think the important thing there is make an effort to be a person, to be a human. And I'm not saying all VCs are like that. I think some VCs are, you know, bad actors, so you won't always get the best responses. But I think as a startup, you are starting a leg down because there are so many startups and there's only so many, there are so few investors. So what you need to do is stand out and be personable and be a, you know, be a human. Like I said, don't just be robotic in your approach. And then if and when you don't get that initial interest from a VC, like, okay, sometimes it's okay to like kind of push back and say, well, no, you know, share your opinion as to why you think it's a good fit. But once a VC says no, like, the response is not to come back and push and fight more. The response is to respect the perspective of the VC, to ask politely if you can, you know, add a VC to your monthly newsletter, keep in touch, you know, quarterly touch points, don't overdo it, but also make sure you're keeping the VC appraised of what's going on. And then to reach back out when, let's say, for example, a lot of times I'll pass on a startup because the stage isn't right, it's too early. We need to see X, Y, and Z more. So if a startup comes back, you know, a year later and says, hey, we've done this, like, would you be open to reopening the conversation? And then it shows me that they were listening and they came back at the right time. Now, the counter argument to that is, if you approach a VC and they say you need to get to $1 million in ARR or some arbitrary metric, like, don't go build your business around what a VC tells you to build. Like, that's not the point, right? We invest in people who we believe know more than us, but are also willing to accept our advice. So at some point, we also want to be investing in people that know what kind of business they want to build and know what kind of what works in that specific industry. So it's not always smart to hear VC feedback and then go drive your business based on that. Like, I don't think that's the move either. So it's a fine balance of, but what we say is we look for a really nice balance of confidence and humility. You need to be confident. You need to know that you know what you're talking about, but at the same time, you can't be arrogant. You can't assume you know everything. And so finding that balance is really important.
Yeah, and I mean, it's the know your audience play, right? So especially in relating back to what you said about the amount of VCs compared to the amount of startups, especially in a place like Qatar, where now the startup ecosystem is growing, but the amount of VCs that we have available over here isn't that many, right? And so building that relationship is super important. Yeah, at all, honestly. And the ones that are here are relatively new, right? Unless they're kind of sovereign funds, or we don't have a lot of old VCs. Like, you can't compare it to the US at all, the way that the funding works. So really building that relationship with the VCs in Qatar is super important, especially if you're in this area. It is super important, knowing your audience, relating your pitch to what the VCs are looking for specifically. So I kind of always give the advice that on the first time, maybe you're not going to go with the initial ask. Maybe you'll give them an ask of what you're looking for, but you won't ask them directly. And then it might take a second or third time after meeting to really understand what they are looking for. Or, of course, do your research before you meet any VC to know exactly what their thesis is and who they invest in. But that, yeah, I think it's super important to know your audience. And so I guess staying on the VC side of things, why is it important to raise VC funding other than capital reasons, right? Other than just raising for money, why do you think it's important? What's the strategic value that VCs can bring to startups? I guess that's the main question is, what's the strategic value?
Well, it really depends on the experience of the partners, right? So for us, like Saeed, that was the executive chairman of Hikma Pharmaceutical. His dad founded the company. Ali Hosseini founded Capital Bank. Almo's been worked in banking for 15 years. So right off the bat, you know that digital health and fintech are strategic to us. So what the main reason you'd seek out venture funding rather than going for a loan is simply because the people that are coming onto your cap table can add value, right? That's like the big thing that's misunderstood about VC. People just like romanticized VC after COVID because they thought that was the way to build a business. Like not every business needs venture money. Some businesses can literally just survive on acquiring debt, repaying that debt over time, and building a slowly growing but sustainable, profitable business. You should only seek out VC money if you require partners that can continue to invest large amounts of capital over time, and specifically if these partners can add tangible value across specific industries, right? You want subject matter experts when you're getting VC money. So the thing that I tell startups to look for is like, one, can you imagine this person that you're getting money from? Can you build a partnership with them? Because once someone owns 5-10% of your company, like they have a right to ask for information, they have a right to demand certain things, and you as a founder have an obligation to provide those. So it's about understanding, like, one, is this a person I can work with? But two, is this an institution that can add tangible value to what I'm trying to build, right? So if someone were to come to us with, manufacturing or construction, like that's not something we've done a lot of. We might look at it, right? We might, get conviction from the founder on the story he or she is telling, but that's not necessarily the way that we're going to add the most value. But when we see things in fintech and lending and banking and payments, like we've done that before, we'll do it again, and that's where we try to add a lot of value. So the way to do it is really understanding, like, what can this person or what can this institution add from a value creation standpoint. If you're looking for just capital, then you may as well go to a bank. You may as well go to high net worth individuals.
Yeah, it's also a lot of times it's also just the name, right? Being able to say that we got funded from this specific VC, depending on who it is. But
it's not always a good thing.
Yeah, I guess it's always, capital interest. Yeah, I like the answer a lot, to be honest. I think capital interest isn't always the only thing that you should be going for. You should be looking into VCs, and I mean, you want to be that type of startup that kind of picks which VCs you'll give your investment to, your equity to, sorry, right? You want to be able to have a lot of VCs wanting to invest in you, but then you kind of take your pick of the litter, I guess. And so on that point, a lot of founders that we have at our incubation are still in the early phases. And when it comes to fundraising, they get kind of confused on how it looks like from the VC point of view. And so as a VC, what does the fundraising process look like from your side of the table? Not really from the startups kind of perspective. What does it look like from yours? Like, what should startups maybe be looking, just to understand how VCs are going to interpret their startups? How does the process?
I mean, look, I'm a seed stage investor, so like the most important thing for me is people. Honestly, like if anyone that invests at pre-seed or seed tells you like you need financial models or X amount of traction, like that's total BS, honestly, because what you're building at seed stage is going to change multiple times. That's why it's called a pivot throughout startup inception. So for me, it's like, again, and I use this word very intentionally, like founder market fit is so important. Like, do I believe that this founder can solve the problem they're trying to solve? Have they lived it? And if not, why are they the right person? So like the big thing comes down to, can you articulate the problem? And I don't mean like going and doing some arbitrary market study of like serviceable, obtainable market and tangible, obtainable market. Like, yeah, that's important. And you should be able to quantify the market. But like, can you get me excited about the problem you're solving? Whether it's an industry I know or don't, can I hear you say, this is the problem I'm solving? Like, oh, that sounds like something that needs to be solved. And then once you do articulate the problem, can you show me the solution versus the existing solution and make me believe that what you are trying to build or what you've built is better than what already exists? And once you've done those two things, can you show me why you and your team are the reason to do it? Really, it's really those three things. Like, yes, traction matters. Yes, growth matters. All those things are very important. But if we're like stripping it down to the very basics, is the problem exciting? Is your solution better? Are you the right person to do it? It's that simple.
Yeah, I love how you brought up the point on investing in the founder, because I feel like it's something that I'm constantly reminding startups about. Is it's not always about the market size that you're obtaining. It's not always about the competitors or even the idea, okay, maybe the problem, the idea is important, but the founder is the most important thing, right? At least that's what, from my time at VC, that's what I can relate to, is that you can always change an idea or pivot into a different industry, but is the founder really a strong founder, someone that you can trust, someone that you want to put your money into, I guess, right? And on the point of working with super early startups or early stage startups, some pre-seed, seed stages, some Series A's, some that are not even in the pre-seed phase yet. Some are just ideas that we kind of help build. I guess a very important question that I even struggle to answer sometimes is when a startup asks me how to evaluate their company. What do you think the best approach is to evaluating a startup's company? How should like working on
valuation?
Valuation. Yeah. And what's a common mistake you see with startups coming up with
Again, it depends. I did a good question. I'll answer that in a second. Have I missed out on any startups that I would have wished to invest in? But before I answer that, this is a question that'll differ based on the stage that the investor invests in. So if you're talking to a Series B, Series C investor, then like that's when the DCF and all those things come into play, because you can actually build models based on past performance. Like that's when it makes sense to use models and financial engineering. But at the seed stage, like it comes down to comparables, right? What are other companies at similar stages and similar markets raising at? Unfortunately, we're still at a stage where I think we have to discount the region twice when comparing to international companies. So, for example, a lending company at the seed stage in MENA versus the US, like one, you're discounting because the market size in MENA is smaller, but then you're discounting again because we have less exits and less liquidity. So understanding that you can't value yourself based on what companies in Europe or maybe Southeast Asia are valuing themselves at, but ultimately it's a game of comparables. It's a game of has the founder done it before? People are paying premiums for second and third time founders because it exhibits an ability to go off and build and execute. So if a founder has gotten an exit, then you can definitely add a premium to the valuation. I know I'm not giving any tangible answer on like this is how you value a company, but because there is no tangible answer, it's a balance of art and science, and specifically at the early stages, more arts, right? So you look around, you figure out what typical dilution is at this stage, right? So if you need to raise 500K based on projections and what you want to achieve, then at the seed stage, I believe it's like 20 to 25% is typical dilution. So you bake that in and then you kind of figure out, okay, am I a first time founder, or are the multiples in this space 10x revenue, 20x revenue, which is ridiculous and it shouldn't be that high? Is it 5x revenue? Are they typically valued on EBITDA? So it's just about understanding how things are typically done and then applying that to yourself. And that's the best answer I can give, because I'm not going to sit here and say seed stage companies should be basing it on DCFs and complex models, because again, that makes no sense. Like you can't value a company based on 5 years of future cash flow projections off of 1 year of historical performance. Does not make sense.
So I hope a lot of our founders took that in, because I get this question a lot, and I give them a similar answer, but not as strong as what you've given. So I'm glad you kind of went into depth on that.
Dilution is an important part of it, though. Like that's something that you have to take into consideration. Like you maintaining founder ownership, especially when there's 1 or 2 or 3 founders, like over time is important, and that should always be taken into consideration, because there are investors that to be fully transparent, I saw a company today where the founders collectively owned 30% after the seed round, and it put me off right away, because there's what's to say that after Series A they own 15% and then they lose the motivation that they had to start the business, right? So making sure that you're also not over diluting yourself early. I do tell founders a lot of times that like early on, take a bit more dilution just so you can have the right partners and you're not overvaluing yourself and playing catch up to your valuation over time. But that doesn't mean going and raising $1 million at a $2 million valuation and giving away 50% of your company right away to investors. Like that's not smart. So it's a balance of, again, that's the science part, that's the math, which is dilution and typical dilution there. And then there's the art, which is like what industry are you in, comparables, stuff like that, and kind of bringing together those two different methodologies.
And then how do you know how much equity to really give away? Because there's a startup that I know that's in the early stages who's looking to get fundraised. Investors are willing to give him around 100K for about 10%. He's in the pre-seed phase. Would you say that's a pretty good deal that early on?
Yeah.
Yeah.
Honestly,
Okay.
yeah, it's totally normal. If the investor can add value, right? At the end of the day, that 10% is theoretically millions of dollars down the line. So it's just about if you believe that person and then that VC is worthy of owning 10% of your business and can add value, right? 1% of an enormous pie is bigger than 10% of a small pie. So it's okay to give up, percentage. It just depends on if that percentage will translate into additional value. A pre-seed investor essentially acts like a de facto co-founder. So you need to understand that person's gonna needs to be able to add value if you're gonna give away 10% of the company. But just based on general knowledge, is giving away 10% pre-seed okay? Yeah, it's fine.
Yeah. So I think that founder is with us today, I believe. So I hope you heard that as well. I won't say the name or anything, but I hope you heard that too. And I guess last week, so the past couple of weeks, we've been working on our startup pitches. And Adil will get to your question because I think it is a great question. So we'll answer that soon. But the past couple of weeks, we've been working with our startup pitches and really trying to mentor our startups with their pitches and help them understand what needs to be included in a pitch deck, I guess, and what to stay away from and what to really focus on. I guess what makes a really strong pitch in your opinion? Or pitch deck, either or, but what makes a really strong pitch? Is there any characteristic that you've seen that really blew you out of the water? It really impressed you?
It's tough. I don't want to repeat myself, but it really goes back to those three things that I said, which is have you articulated the problem? Have you showed me the solution? And then have you convinced me that you're the reason? You're the founder for the job, right? So obviously that there's the things that I can say that everyone knows, showing up with energy, having good, good vibrations, being positive, smiling, being passionate, right? You need to be able to demonstrate that you're passionate about what you're doing. Being a founder, again, has been romanticized so much. It's the hardest job in the world, 10 times harder than being a VC. So you need to make me believe that you're in it for the 10, 20 year, 10, 15 year grind, right? It's not just a 5-year turnaround. Especially for me as a seed stage investor, I don't expect to get exits in 5 years. If I did, that'd be great, obviously, but that's not the reality of things. So coming in and demonstrating that you have energy and you have passion and you're willing to build something from the ground up for a long time, that goes a long way. Like I said, small things like understanding more about the VC you're speaking to. So if you come on the call and you know that I've invested in these 3 companies and you think your startup can be a customer of those or vice versa, and you've done that research, that makes a big difference, right? That shows me you've not just blasted an email to all the info at Dash and info at Global Ventures and whatever it is. You've actually done the work to see how your startup can benefit my companies. And when you've done that, what I'll do is I'll then go ask those companies, hey, would you use a product like this? And that's my way of doing additional diligence. So the extra work goes a long way. But then it goes back to those 3 things I said, which is, can you articulate a problem? Make me believe in that problem. Can you get me excited about your solution? And can you also make me believe that you as a founder are the right person to build this, or you and your co-founders are the right people to build the opportunity?
Yeah, I mean, I totally agree with that as well. And I think a big challenge that startups face with their pitch decks are when they focus too much on the market size. And they put these big numbers on their pitch deck. They put these huge numbers, but they don't really explain how they're going to tackle it, right? They don't explain how. So they say, okay, we'll take 5% of this market. That's our sum, but they don't explain how are you going to tackle that 5%, right? And another thing is also the competitors. So you can compare yourself to a whole bunch of different companies, but don't just tell me you're better at this and this, but why are you better? How are you better? And how is that going to help you tackle that market as well?
Yeah.
So
We're getting prompted to answer the questions in the chat, so we'll do that now. But just one thing I'll say is one big no is never tell, at least me, and maybe other investors are okay with it, but never tell me that there's no competitors in your field, even if there's no one directly competing with you. For example, the example I always use, if you're starting a online Pilates studio, for example, and you say that, okay, well, everyone's doing in person, no one's doing online, I don't have any competitors, that's a horrible answer. You are competing with anyone that is doing anything to do with working out, right? So your competitive landscape is not always only companies that do exactly what you do, but it's anyone that could take away clicks, likes, engagement from what you're trying to build. So saying that no one is doing what you're doing, that is the biggest turnoff ever. Even if you are building something so novel and so proprietary, there's always going to be people you're trying to take market share from. So recognize that.
Yeah, it's a lot of times startups will put the grid, right? That grid showing that they're up here, so they're the cheapest or whatever it is comparing the two. I forgot the name of the chart, to be honest. But they'll put themselves up here, and then they'll put 4 other companies down here, and they'll say that, oh, we're doing something that nobody else is doing. And I always have the question of, okay, so globally you're the only one in that area, and there's no one that can be as good as you or similar at all to you. So that to me is where I find a little bit weak, and I think that that's the biggest challenge I think startups are facing with the competitive analysis. I think it's important to compare yourself to competitors, definitely. It's just something that you have to do right, because at the end of the day, a pitch deck is almost your first impression when it comes to these investors. And so you really want to articulate everything. And so if you just put yourself up there and not explain why or really show strong competitors to what you're doing, it just makes you look a bit weak, and that's it, right? So I think we're heading to the end of the fireside chat. I just want to ask for our founders, just what are you seeing in the regional landscape right now? Are there any key trends or shifts founders should be aware of within, I guess, the MENA region?
Are we? Sorry, is that from you or is that from one of the? Okay, that's from you.
That's from me. Yeah.
Okay, what I'm seeing is a lot of embedded finance. So finding a way to bridge finance into whatever it is a startup is offering, and I think that's important. I think at the end of the day, like we have a very digitally native population all across the region, and to build that generation up with an understanding of how to invest, save, make money, again, save money is very important. But one thesis that we developed in 2020 that we've sort of doubled down on in the past couple of years is companies servicing other startups, right? So there was this big wave of D2C companies during COVID, and while those typically have high margins and can be very successful, and one of the most successful companies in our portfolio is D2C, we're focusing very much on B2B solutions right now. At the end of the day, for economies to grow, you need that middle class of SMEs to really be thriving. And for those SMEs to thrive, they need other SMEs servicing them, whether it's helping them with finances, so lending to startups, whether it's helping them with internal optimization, so like warehouse management, order management, or it's helping them with something like insurance for SMEs. So we've taken this approach of we're going to focus very much on B2B startups, specifically ones that are servicing other SMEs, and then we put that into practice because our last 5 or 6 investments, PostX does revenue-based financing for startups. Omniful does warehouse management, supply chain management for retailers and e-commerce companies. WildX does insurtech for SMEs, and Orbi, like I said, does lending services or machine learning and AI and credit analysis for other B2B companies. So we really are taking a startup first approach where we want to focus on companies that are helping other companies.
Okay, great. So I think we should get into these Q&A questions because there's a lot coming in right now.
Sure.
And we're going to save it to the end. So maybe we'll answer a couple now, do the pitches, and then save the rest for later. I think that could be a good way to do it just because there's a lot.
Go ahead.
So I guess first question, real quick, we can ask the one that I did ask is any startups you missed out on that you wished you invested in?
Yeah, there's one, and it's hilarious because it's actually a D2C company, so it just goes against everything I just said. But we actually took to IC, and we're very close to investing in a company called Iowa. It's a remarkable company. We got IC approval and everything, but just last second had to pull out for reasons outside of all of our controls. It was unfortunate, but remarkable company, really great founders. I believe they're gonna continue to execute and scale across the region. Again, they essentially were first branded as the Warby Parker of our region, but then they built in their own proprietary manufacturing process and they built technology within that. So incredible founders, huge market opportunity. And even though we missed out on it, the capital we would have allocated there has now gone into a different startup that we think we got more ownership of. So in the end, you always find good startups and you shouldn't have any regrets, but just for the sake of answering the question, like that's one that I wish them very well, and I'm so happy when I see all the success they're having. But at the same time, sometimes it like eats me on the inside, knowing that we should have been on that cap table.
And I guess some more are, what are your favorite startup podcasts and Twitter follows you'd recommend for founders in the region?
God, I'm like the worst podcast host because I don't actually watch podcasts. But if I had
Then
to
on
pick
top of
two,
this, yeah, I also want to say, what about a book that you might recommend as well?
okay.
Yeah.
So in the business sphere, Diary of a CEO is a great podcast. Stephen Bartlett asks phenomenal questions and really knows how to guide a conversation. I also think that Ahmed Takata in our region is actually doing a really good job of getting VC podcasts out there. He's bringing in a lot of the major players, from partners to principals to founders, on the podcast, and I think it's actually a really good way of understanding what's going on in our region. So internationally, I say Diary of a CEO coach, but locally, I want to give a shout out to Ahmed Takata and VC React. I think he's done a great job. Books wise, I hate to shout out someone who's, you know, and I don't want to get political here, but like someone whose personal beliefs I wholeheartedly resent and disagree with. But 0 to 1 is a very good book for startup founders, just to understand that process of building and what it takes to go from idea to execution. So that's a pretty good startup book. But aside from that, I can't think of anything off the top of my head.
Okay. I mean, that's great. Good amount of recommendations, I would think. And we have some more, I guess, direct questions from founders asking about their startups specifically. I think we can get into these towards the end. For now, I kind of want to go through the pitch decks because I don't want to waste too much of your time, or take too much of your time. I wouldn't say the word waste, but I think we have 3 startups that will be pitching. So we have Palazzi Instruments, MindBridge XR, and DLOC Biosystems. So I think we can get started into that. So let's start with Palazzi Instruments and their CEO, Giuliano. So Giuliano, you can turn your camera on and share your screen. And
good afternoon, everyone. Let me know when you can see my. Can you guys see it?
Yeah.
All right. Hello, everyone. I'm Giuliano Palazzi, founder of Palazzi Instruments. The problem is, in sports where millimeters and milliseconds are crucial, speed and acceleration are the most desirable qualities in athletes, and they're not really easy to measure. Why would you want to measure speed? Well, as a coach, you want to program training loads successfully. You want to measure progress. It will also help motivate the athletes because they will see how they progress. And it also is useful for scouting talents. Current solutions, stopwatch, it's accessible to all, but has a massive human error with reaction time and isn't really precise. Timing gates removes the human error, but they take forever to set up. You need to lug them around, and it's still not precise enough for in-depth analysis since it's point-to-point. GPS, they cost like $2,000 a pop, and you generally have to buy one per player of your team, and they don't really play nice indoor. So forget about using them in summer in Qatar, or any place where it's either too cold or too warm, or basketball, like in your case, you guys always play indoor. Video analysis used to be that you used to have expensive high velocity cameras, but now the iPhone is good enough. But you still need someone to slave away afterwards, frame by frame, measuring the distances to get the speed and acceleration. And laser lidars, which is the solution that our solution employs, and it's unrivaled in terms of precision. Before going into my solution, I'll go through what's in the market. This is called the LAVEC. It's been around since 1987. Since 1987, it has matured beyond research. It's used to benchmark new devices that measure speed and acceleration. The problem is, since it's old, it's really outdated. It's really heavy. It's like 3.5 kilograms, so it's very bulky. You need to lug it around, Imagine flying with it too. The cables are annoying, and they're also a liability because if they break, you can't use the device. The software is really old, as I said, and you need to wrestle with it every time you have to go and use it. And on top of that, it's 12,000 euros. So it burns a hole in your pocket. This is our solution. It's called the Sprint Scope. It has the same precision, no compromise. It's over 10 times lighter. It's wireless using Bluetooth. The software is much more intuitive. Wait a second. And it has all the modern standards according to scientific literature for processing data. And yeah, it's like over 5 times cheaper. How one would go about using it? This is me and my little brother. I was coaching him on sprints, and basically you take the device, you set it up on a tripod behind the athlete. You turn it on, connect it to your device. You look through the scope. It has a rifle scope, and you aim it at the back of the athlete. The rifle scope also has different colors depending on the lighting conditions, how far away or close the athlete is. You can change that accordingly. The athlete then runs away, and after the sprint is done, the software instantly creates a report. This allows you to give feedback to your athlete immediately, and the software is very very intuitive to use and provides like the coaches can manipulate the data to provide insights. So in your case, you're a basketball player. The way you could apply it, you can measure a sprint, the length of the court without just a regular sprint, and then you can make the athlete sprint with a basketball. And then with both metrics, you can make a percentage, and then you have the efficiency of dribbling with the ball while sprinting. That's just one application, but you can also use it as a way to measure speed and acceleration regularly, like they do in football and athletics. This is some screenshots of our software. These are the graphs. And we have a Windows application, which is working. And it's 95% done. And we are currently building an app for phones, so it's much more convenient for the coaches. Both of them will have cloud connectivity. We're also designing that at the moment, and that will allow the user to not deal with the hassle of managing the data, and also make it easier to compare with the historical data. So this is an example report. You can see it shows a curve, a velocity, distance time curve, and you can see it's high definition. The oscillations are mainly the steps. So the athlete, as they run, they decelerate when putting their foot down, and then re-accelerate when they push off. So the report would get linked back to the cloud. It's a high definition curve. This is an example splits. So you get the distance and the time, velocity and acceleration every 10 meters, and also the point of max velocity. In the software, this could also be a place where you could put the efficiency metric. The current market, since it costs 12,000 euros, it's basically for elite only, for big institutions like Bayern Munich and Paris Saint-Germain. But we want to democratize access to this technology and give access to schools and small coaches. The market size, keep in mind, this is only MENA, but the main takeaway from this slide is that there's 30,000 coaches, so 30,000 potential customers, but we won't be targeting only MENA. Attraction, we are already in contact with 5 top sports scientists and coaches that are going to beta test our product. And we have already been in contact with 3 sales networks that have expressed interest in selling our device. Our revenue model is a one-time fee for the device, and you get access to the software too. And you have an optional $250 fee for the cloud, but we are still evaluating that since we're developing the cloud, but it might go up. Our production costs are $500 for the device, but we haven't really optimized in that area, so I'm quite confident we can get it below that. And as you said, the most important thing you guys invest in, what I'm here to pitch, is the team and the people. I'm Giuliano Palazzi. I'm CEO and founder. I'm a computer engineering student, and I'm also an athlete myself. I fence for the Argentina national team, and I'm in the team with my father. He's already an exited founder in the same field, always devices for sports science, and he has been working in the field for over 3.5 decades. We are currently thinking of bootstrapping, but we might raise funds in Q1 of 2026, and that would be to be put towards developing the app, developing so marketing and our website, and stocking components to make our first 100 units, and exploring potential IP solutions. Thank you for your time.
Cool. I'm just going to give a couple of points of feedback, but I like the personal pictures and narrative of you and your brother. I think that brings like a personality to the pitch and makes it less robotic. And obviously, you continuing to reference basketball means you listened for the first part of this podcast webinar. That's what's going to drive my personal interest. A couple of points of feedback. So when you mentioned the competitors, there was no analysis on the cost of others' existing solutions versus yours. I think that's an important distinction to make when you're talking about competitive landscape. Even if you're more expensive, that's fine. That would demonstrate that you're maybe a higher end product, or you've done a bit more R&D into what the capability is. But there was nothing about your pricing versus others. I think one thing that's difficult is that when you're explaining you're explaining how it works, you're saying, just put the camera on a tripod, but what that means is for your machine to work, it requires a tripod, which means not only am I buying your product, but also I have to go get a tripod. So again, there's just a bit of friction there. And I think there's other ways to articulate it. Maybe you can say, put it on like a stand, put it somewhere where it doesn't have to be a tripod, right? There doesn't have to be an additional cost incurred for a user. Besides like sort of the size of it, you didn't really talk about how unique it is, right? So is the data that you are offering through your product different than the others? Yes, I understand the others are clunky, hard to travel with. That's fine. That's all that all resonates. But at the end of the day, if there's nothing unique about the data you are providing, then that's going to be a hard sell to investors. I think the most important thing would be it's smaller, but it also offers deeper insight into what the athlete is or how the athlete is performing, right? And I think just to build on that as well, what you need to then articulate is that the lens itself that you're using in these devices is something that can't be replicated within an iPhone, for example, right? Because as you said, like anyone can take any video with their iPhone, but what separates this product theoretically should be the quality of the lens and the data it captures. Because if that's not the case, then given the rampant development of technology these days, anyone can build something and just do it from their phone, right? So it's important to clarify that the device itself and the lens you're using really offers deeper insight analytics into athlete performance. Go-to-market was interesting, but given that, where are you based? Sorry, just so I can ask before I answer this question.
In Qatar.
Yeah, so I mean, for me, the obvious thing for you to do would be to talk about Aspire, right? Isn't there some? I believe it's called Aspire. There's like a world class. Yeah, so I mean, mention that, right? So that Aspire is huge, right?
We don't want to mention it because there might be potential conflicts of interest, but it's in the works.
So what I would say, so fair enough, and I respect that. And I think that's the right thing to do, right? You don't want to cause any conflict of interest. But at the end of the day, given that you're based in Qatar and given that this is one of the most, if not the most renowned recovery center in the world, like referencing that, this is a potential customer would be important in the pitch, right? So where is it? Here, yeah. Again, so I didn't see it, but and maybe that's my fault. But I would stress that because again, as an athlete, I know that Aspire is there. So the entire time I was thinking, he's in Qatar. Why is he not speaking about Aspire?
He works there, yeah.
Yeah, and then just the last thing would be, I don't think it's. So I think it makes sense to say, you're thinking about fundraising, but like fundraising isn't just something you do for the sake of doing. Like it's very scientific. Like you need to know I'm raising 1 million to cross these KPIs. So when you say we're thinking about going off and raising in Q1, that kind of, and I'm going to use these words for lack of a better term, it kind of seems half-assed, right? There's no like there's no method to the madness. I need to know that you've done the work, you've realized that 500K gets you enough to buy or to produce 500 cameras to get to $1 million in run rate or revenue, whatever it may be, right? There has to be a scientific approach to fundraising. It can't just be like, oh, we might fundraise in Q1. You are raising to get to certain points, and then once you get to those points, you raise again to get to new points. And that's how fundraising works. It's always for a reason. You always kind of backtrack it. It's never, you don't come up with a number to fundraise and then build from there. You kind of say, what are the metrics I need to get to be an attractive business for a Series A investor? Okay, I need to get to, let's say in your case, 15 teams using it. How do I get there? I need to raise $1 million. So that's kind of how you build fundraise methodology.
Yeah. I'll reply to a few of them. For the fundraising, initially, before we were asking for $500,000 riyal, and that would make us at least make the 100 units and have some money to hire the things I said. Just that we realized we can bootstrap most of it. That's why I said that we might think about fundraising. So we have a established number and what the money would go towards. For the solutions, like I outlined here that these are other technologies that can be used. These are like what we compete to measure speed. And out of the laser lidars, which is like basically it's like the scientific literature, because it's a very scientific device. They use it for research. There's only one of these. There's actually two, but it costs the same and it's not as good as this one. My father works in Aspire and they have 5 of these. So he knows all the shortcomings of this. And like these other solutions, they can't really compare. They gave a different. I don't know how to explain this, but basically we're only competing with this device. If I can, that should I think solve it. And like we want to provide what that device provides for much cheaper, and also the software, like the data processing, we can't really invent anything. We have to use the standards in the scientific literature. That's it, I think.
All right.
I think I've answered some of the questions, but
thank you so much, Giuliano.
Thank you for
Thanks, Giuliano. It's very interesting. Thanks, Giuliano.
That was great, and we'll have the feedback for you as well. We're taking notes on what Aboudi's feedback is for you, so we can relay that back as well in case you didn't keep note. I think we have 2 more. Let's try to get through these quick so that we're not spending too much time on them. But Faith and MindBridge XR is next. Yeah. So let's try to keep it to 3 to 5 minutes, guys.
Yeah.
All right.
Okay, 1 second. 1 second. Yes, you can see me now?
Yep. All good.
Okay. Share. All good?
Yeah.
Okay, now it's good, right? All right. So, welcome everyone. Our journey began by a virtual reality simulation for, why is it not going? Okay. Our journey began by a virtual reality simulation for autistic kids. For 2 years, we built a solution that helped over 60 children and generated $100,000 in revenue. For 2 years, we worked with a group of experts from mental health to physical therapy, and we learned a hard lesson. The core problems we were solving, subjective assessments, inaccessible tools, and low patient engagement, were not unique. They were universal cracks in the universal 200 billion health and wellness industry. For example, physical therapy is fundamentally broken. It's subjective, with assessment reliability as low as 60% due to personal interpretation. It's inaccessible, with a single lab session costing over $500, and therapists waiting 30% of their time on paperwork. It's also disengaging, with patient adherence to home exercising dropping below 50%. because the process is repetitive and uninspiring. Now, our solution is a holistic ecosystem that bridges this gap from analysis to action. Now, start with our AI Copilot, a SaaS platform that turns any 2D camera into a clinical-grade analysis lab. We provide sensor-driven, objective data and automated reports, boosting assessment reliability to over 95% and cutting documentation time in half. This data then powers our immersive XR platform. We turn therapy into an engaging gamified experience designed to increase patient adherence to over 80% and serve a range of needs, from pro athletes to seniors at home. Our model is a flywheel. We start with a B2B SaaS subscription for our AI Copilot. We then introduce our proprietary hardware, which is a classic razor and blade model. The hardware sale locks in a high margin premium SaaS subscription, creating a deep defensible moat. Our go-to-market strategy in the MENA region includes sales and partnerships, content marketing, industry conferences, and corporate wellness pilots. Our main unfair advantage is that we provide high level of accuracy, but with high accessibility and user engagement. Our financial plan shows a clear path to profitability within 3 years, reaching 2.2 million in annual recurring revenue. Our team is a multidisciplinary powerhouse built to execute this. Our co-founders have deep expertise in clinical practice, AI, XR technology, and business execution. We are not just an idea. We have a proven traction. Right now, we have our prototypes ready for the Copilot and hardware, and within 6 months, we are targeting 20 paid customers for piloting, with a plan to scale within the next 3 years. Today, we are fundraising a total ticket of $750,000 in seed funding from business angels and VCs. This gives us an 18-month runway. MindBridge is not just building an app. We are building the data-driven, immersive future of human health and wellness. Thank you. We'd be happy to answer your questions.
I thought that was an excellent pitch, honestly, just in terms of how it was structured. It's never easy to pitch in 3 minutes. I think it's so hard for founders. So well done. I have a clear grasp of the solution and what it is you guys are doing. So let's dive a little bit deeper. So now you talked about having, I think it was 20 pilots or upcoming potential paying customers. What does an integration look like with you for a clinic? So when you go and you're selling to these clinics, how are you demonstrating the product? How are you integrating into their existing practices? And then how much of it is hand-holding and continuing to be there and helping them integrate? And how much can you sort of let go and step back and analyze from a distance?
I'll talk about prototypes. So actually, in the past few months, we've been building prototypes and for the platform and for the hardware as well. So we're planning to use this hardware as a way to test the market. We have many customers that we're planning to go to, mainly Aspitar, and we have many more clinics as well.
But in terms of the AI Copilot, right? That's the initial go-to-market, isn't it?
Okay. Let me just transfer you to our founders, and he will explain more about it. Hi.
Hi. Hi. Thank you for your question. So, sorry, just there is an echo. You can hear me now without. Sorry. Hi. So so the idea, we built this small prototype for the AI Copilot. It's very simple. Like you can upload a sample video. We are using a medical protocol designed by our team of doctors and advisors. And already they are conducting a group of trials under their clinic. And the idea, we aim now, we already contacted some clinic here in Qatar, also in Tunisia, and we will very soon start piloting with them to test the accuracy. Our main, the first result that we have it from the analysis is so accurate, and we have very objective results. So now we are building our library of video to enhance the AI and to enhance the model more than the current version. I hope that I replied to your question.
Yeah, no, I think it's correct. I think what the only piece of advice I would say is like there's a lot of different things going on, right? Versus the hardware and the AI copilot. So just when you are pitching, just to be very clear, where the focus is, because it's, you know, you never want to do too much too early. You kind of want to develop a core competency and to prove that is working and that's in market, and then you can continue to build additional. Because from the beginning of the pitch, it made it seem as though the initial core competency was to essentially build this AI copilot, this platform that would analyze videos of patients and therapy and, you know, physical rehab. But now it seems like the focus is more on hardware. So there's no right answer. I'm not saying one is right or wrong, but I think just being a little bit more clear in what the actual go-to-market is and where the company will focus on for the near and short term.
Yeah. So just allow me to maybe to reply again to your question. So the idea now, what we have now on the 2D camera, it's still we need more data from the hardware. This is the reason, like the next phase, we will include the hardware in our solution, like to get like 99% results. So this is the idea. So and it's good strategy, like based on the market, like to get early customer and to see their first feedback and to understand very well the needs of the market. And this is what's happening exactly with our previous testing with autism and other therapy we test for the past 2 years. Yeah.
Great. Thank you. I don't have any more feedback, Karim.
Yeah, perfect. Thank you, Akram. Let's just do the last one real quickly. I know it's taking a bit long, Aboudi, but we have Waddah,
That's all right.
who's actually the winner of Stars of Science, I want to say 5 years ago, in 2017.
5 years
Stars of
ago,
Science.
exactly.
It's a show that we do over here with the founders. So Waddah and DLOC Biosystems.
Thank you. 1 second. Just 1 second. Good. Can you see my screen?
Yes, it's starting now.
Amazing. Perfect.
Not yet, actually. There we go.
Okay, perfect. So, hi, I'm Waddah Malaab. I'm the founder and CEO of DLOC Biosystems. We develop organ-on-chip devices where we can grow living 3D micro-organs inside of microfluidic chips. So the problem that we are solving is that today it takes $2.6 billion and 12 years to develop one drug, because 90% of the drugs fail at the late and expensive clinical trial stages. The reason why is that we can't predict those failures preclinically, because at the preclinical trials, we test drugs either on animals or on cells grown in 2D, and those models do not behave like the physiology of the human body, what's happening in the clinical trials. So that's a problem. So if we can predict those failures early on at the preclinical phase, we can cut the cost of the preclinical trials by just like predicting the failure of the drugs that would fail due to efficacy or toxicity. At the preclinical phase, we can cut the cost of clinical trials by half, by almost like 650 million out of the 1.3 billion that per drug that reached the market. So the gap that we are solving, our current focus niche is basically ductal tissues. So there's some different solutions for different type of tissues, but ductal tissues play a fundamental role in most diseases, yet they are poorly modeled in the lab. Ductal tissues are found in most of our organs, such as the breast duct, prostate duct, the heart, the liver, the kidney, and prostate, pancreas, and those models, those tissues are very important. They are the fundamental part of the different organs. So that like 85% of cancers, for example, happen in those epithelial ductal tissues, but they are not modeled in the lab in an accurate way today. So our solution, we invented a chip. This chip has inside of it, we incorporated some scaffolding systems. Those scaffolds, we can insert cells inside of those chips. The cells will attach to the scaffolds and form 3D organ models, 3D tissues. Those tissues behave like the tissues that we have in the body, so that we can test drugs on it and we can determine what's the ideal treatment for each disease and what's the optimal dosage. So that's what we do. On the right side, you can see like the tissue grown inside of a chip. In our product portfolio, we don't have only the chip, we have also other devices. So we invented the chip, but we also invented the manufacturing process behind the chip. That's what take us like 5 years to develop just the manufacturing process. We have 22 patents for our technology. For the chip, we have 11 patents for the chip and the chip design. For the other device, we call it the operating system, we have also 11. Some of them are granted. So the chip can grow one organ model in an accurate way in the lab. But we also invented another device. We called it the human-on-chip operating system, which is a device that can connect multiple chips together to model the full human physiology on a chip, the full human body in terms of the dynamic system on a chip. This device can measure and can manipulate the fluid flow and the cell and drug flow basically into the system, and it can measure real time what's going on. We also invented we also are currently working to develop another technology, which basically is AI, which is a software that can control and predict in real time basically the drug reaction on the different tissues. So for the validation, we are currently collaborating with multiple research institutions, including AUB, UCL, Bradford, CA Grenoble, and Cedar Medicine recently. And with each institution, we are developing an organ model. So we are giving our chips, we are developing the organ models. Once those organ models are ready, we'll start selling our drug testing services on the chip itself. In the next funding round, we'll develop the operating system where we will be using like more automated, more advanced testing that we're able to sell, because we sell a drug testing service to pharma companies. So one of our first models that we grew is the breast cancer model. So that's a breast duct, human breast duct in the chip. It's a milk duct where we can study breast cancer, for example, the different breast cancer drugs on the chip. For the market, we have two markets that we aim to target. The first market is the preclinical services for pharma companies. So we take a drug, we test the drug on our models. So we have the whole product, like we have the whole development portfolio, from the chip design to manufacturing to assembly to packaging to cell culture, organ model development, and assay development, and also service sales. So we take the drug, we test on our models, and then we sell a drug testing service to pharma companies. That's our first market. The market size will be 78 billion in 2030. The second market is basically the precision medicine market. That's a bit into the future. So for the precision medicine market, the problem with precision medicine in general is that most of the data is basically genetic. There's nothing about the genetic data, which hold most of the information when it comes to precision medicine. But once the operating system and AI is developed, basically we can venture into this market. For this market, we take a biopsy from a patient. We grow a patient on a chip model. So a body on a chip, on a chip, and then we can use those models to be able to test drugs and determine what's the optimal treatment for each patient, what's the optimal dosage. The reason is that today, for example, 27% of cancer deaths are due to chemotherapy-related toxicity, because the same treatment that can treat Aboudi can kill Waddah. And that's basically where precision medicine is heading to give Aboudi a personalized treatment with a precise dosage, and for me, the same thing. For the traction, we raised to the state around $3 million. Around 750,000 were in grants, and more than 2 million were in investments. With this money, we developed a manufacturing facility where we have like our clean rooms and everything to manufacture the chip and to do the engineering R&D. We currently can manufacture 1,000 chips a month. We have the process is currently semi-automated and fully automated. We developed literally every device in the in the facility almost from scratch, most of them. Because we invented the whole process of the manufacturing. This costs us a lot. But also we developed our own biology lab. Our biology lab is in Discovery Park in the UK, where we were able to sell our first drug testing services hopefully next year. And we did also different collaborations with different companies. The last one was with a company called Valerix, which is a pharma company that's developing different drugs, but also they're also developing some organ models, mainly for the breast cancer and the liver. And we'll collaborate with them basically to develop those organ models to be able to sell our services on using their drugs basically. So we are a team of 26 people working in the company. I'm the founder and CEO of the company. I'm a mechanical engineer by background. I worked in biomedical research for 5 years, and I worked with the biologists to design like solutions for biologists. But at the same time, I'm an engineer by background, also by core. So with our team, we have Julia. She's the head of biology. She has 15 years of research experience. Mustafa, he's the CEO of the company, has 10 years of mechanical design, also managing people. And Hadi is basically the CTO. He's also a previous co-founder of different companies, but also he has 18 years of experience in mechanical and industrial engineering design. So we have also on our team 3 business developers, 5 biology team members, 6 engineers, manufacturers, researchers, and we also have a advisory board from the spanning from the industry, also from the regulatory bodies, and from business, from academia. We are currently raising $2.6 million in a seed round. We raised around 2.3 to date, and then we are the last 300,000 basically. We are allocating them to an investor that can help us also strategically. So we are raising them in terms of a safe, simple agreement for future equity at a 20 million money valuation cap, and with a discount, of course. And the next funding round will be a 10 million Series A investment. So this current funding round, the aim of the round is to be able to sell the pilot testing next year, like early next year. And this next funding round is basically to develop the operating system and expand the market reach. That's it. Thank you.
So turn the camera on. So first of all, I just want to recognize how difficult it is to pitch in a language that's not your first language. So all of you guys, just well done. I don't know if there's a second language that I could do a pitch as comprehensive as the one you just did. So I think it's honestly very impressive. Look, what you're building is obviously very technical and very unique and specific, and I think the need for strategic value add investors is more important in an industry like this than anything else. Obviously, we're very connected to Hikma Pharmaceuticals, so please do follow up after. I'll send the email to Kareem for you to. It's info@dashventures.com. Just send me a deck and a bit of a brief on the company. And what I can do is see if there's any interest from our partners at Hikma to take a look and either have a conversation or see if there's any relevance. In terms of the pitch itself, honestly, I thought it was pretty strong. Again, it's very technical, so it's important that when you're pitching, you take your time to explain, what it is exactly you're doing, because not everyone understands how these things work. But all in all, I don't have too many comments. I thought it was a good, strong pitch, again, especially because you only have a couple minutes. I do have to hop off right at 2:30, so I don't want to. I want to make sure Kareem gets time to wrap up. But very interesting. And like I said, please do send me your deck, and I'll see if there's any interest from our partners at Hikma to take a look.
Amazing. Perfect. Thank you.
Thank you, Wadah. Thank you, Aboudi, for all the advice. Honestly, fantastic. So yeah, I don't want to take any more of your time. This webinar has been a long one. I hope everyone enjoyed it. Oh, my video is not on, is it? Sorry. Okay, sorry, my computer's. There we go. Okay. So I hope you all enjoyed it. It was a longer webinar, but I think we went through a lot of content. So thank you all for joining us for QSCP's first Impact Engine webinar, Inside the Investor Mindset. It's been a pleasure to have you all, and we hope you're walking away with some valuable insights and into how investors think and what they look for in startups and how you can really better position yourself when it comes to fundraising. Again, a huge thank you to Aboudi Al-Qattan. Thank you so much, Aboudi. Really appreciate you for sharing your journey, your expertise, all the advice to all our startups. And of course, a huge thank you to our founders, Giuliano, Wadah, and Ghaith. Thank you for coming, presenting. That it's not easy to present in front of everyone, right? At QSP, we're also committed to supporting founders who are building bold science and tech-driven solutions with global impact. Whether you're just starting out or preparing your next raise, we're here to help you succeed through your startup journey. If you're interested in learning more about our programs, check out qscp.qa. I am going to share my screen. So these are our socials on Facebook, LinkedIn, Instagram, and X. Please go check out Aboudi Al-Qattan as well on LinkedIn. Check out Dash Ventures. Go listen to his Beyond the Buzzer podcast. We put the link in the chat earlier, so we'll put that in here as well. Thank yeah, stay tuned for more sessions. You can find out on our website when we're going to have some more events come up. And yeah, stay ahead of what's coming next. We'll also keep you updated through email and I guess all our other channels. Right. So thank you, everyone.
Amazing.
Thank
you. Just a clarification that you're sending a Spotify link, but we don't actually post too much on Spotify. YouTube is the way to follow our podcast. By the way, thank you for the opportunity. I appreciate it.
Of course, thank you for joining us. And do you have anything else you want to any other socials they should check out? Anything they should check out?
No, that's, I mean, this is more about Dash than the podcast, so there's no need to go there.
All right.
Thanks.
Amazing. Thank you all for joining us. Hopefully we see you soon. All right.
Cheers, Kareem. Bye, guys.
See you. Thank you, guys. Bye.